Okay guys, I want to record this quick video because I've had some of you ask me how do I actually analyze price history. Now, you've got to realize that there is no guarantee that what price has done in the past will happen again. So you don't think guarantees in the market. Never. Don't ever think guarantees in the market. You can only consider probabilities. So what's the probability that this could happen again? So it is always a question of could happen. So what's the likelihood of it happening again? That's how you must approach the market. And we know that there are setups that have a high probability of repeating themselves. Not guarantees that they'll repeat themselves. That's why you've got to also, because you know you don't have guarantees, that's what then makes you stay disciplined and make sure you apply required risk management on your account, because when you don't, then you can also lose your account through that process. So this is quickly what I do, which is what I've been doing most of this today. Going back in the week to see how price performed. And because when you're in the heat of the whole process during the week or during the day, sometimes you miss out on some of those subtle setups in the market. But then when you go back to review, it allows you to see what you had missed that you can then apply the next time. So today on this video, I'm just going to look at two things. Basically, they'll be based on the wave strategy, which is one of our very profitable strategies. Based on the wave strategy, and I'll be looking at two things. One, what I call the candle pattern, long tail candle. The long tail candle reversal pattern. People call it the inverted hammer, the pin bar, and all those sort of things. But we'll just be looking for those. Now, basically what I'll be looking for with the long tail reversal pattern is where I have price in an uptrend or directional bias is up, as it were. Just like in this case, how do I know directional bias is up? The wave is above the 89 EMA. Now, I should also say this. Recently, I showed you that I use this and this kind of template, as it were. So I have my wave strategy across 4 time frames on every asset I look at. So I have the M3 if this is on the MT5. I have M3 MT4 is M5. So it's M3, M15, H1 and D1. And I'm just looking at those. Now, I look at my setups mainly around the H1 and I take my entries on the M15. Sometimes, quite a few times, I will take entries directly on M15 without looking at H1, but I always start out on the H1, as it were, and then look at smarter entries on the M15. And so in this example I'm going to be looking at now, you could see that during this week you can see this long tail reversal pattern here, and it also showed up here prior here as well. So what I'm looking at is in this example here, I would have preferred to have had price in showing a bullish bias, and then I have this setup show up. But then whenever I see this setup show up after price has been significantly going up, then I'm ready to take it. So in this example here, you can see we've had this massive bullish bar for an hour, then we had another bullish, it didn't break this actually, but then we had this setup here. This is not a very perfect one, but yes, it will count because it looks more like a tweezer there. And so I will just take me a put a sell stop there, and you can see if I wanted to have my stop loss up here, if price breaks this area here, then I should only be in this setup. And so when it breaks, I don't just want to touch, I want price to actually close above this level here. So I'll wait for a candle to close above that. Now, the easiest thing to do for those of you just starting out is just place your stop loss there. So just have your stop loss there. But what I will do myself is to first of all wait for price to actually break. And what do I mean by break? So I must get a candle close above this before I exit that position. So that's what you can do as well. But you can see after 1 hour, nothing really happened. Price came back up. Then the second hour, after the second hour after we entered the trade, you can then see things that started to happen. Boom. 19 points on 19 pips on GBP USD. Now, depending on the trade size you're using, if you're on something like 0.1, so a mini lot, and that's $19 there. Then wait for the next one. Boom, you can see 65 pips. That is $65. Now, if you're trading one standard lot, that is already $650 as it were. Now, if I see this kind of setup after, I will be cautious. I'll probably move my stop loss close to this place here, but then price gave us a bit more. You can see about 86 pips, sorry. So that's it. So here too, what happened. So this is a more recent one, a couple of hours. So this has actually gone down before the market closed on Friday, 18 pips. So that's not bad, as it were. On the M15, sharper entries here. So which one would I have entered? So I'm looking to find when prices are above the wave here. So price is way off from the wave. You can see the wave here. Price is way off from the wave. I want to find me that setup out of the wave here, and then I'll follow it to the downside. Now, if you look at this candle here, it gave me that sort of a setup, and then I would have had a pending order there. So the price, when price comes down, boom. But then what happened? 15 minutes, nothing happened. 15 minutes, nothing happened. Then boom, that started to happen. Then I get me this one as well here. That is also a bearish reversal long tail candle. Boom, boom. And I could have actually then moved this to this point here. And you can see we then got filled in on this candle, but the next 15 minutes price went up, did not close above it. It just touched, pierced, and came back. And then what do we get? We get 17 points there, and you can see several points. Now, at this point here, I would have considered getting out of that trade, moving my stop loss to this level here. I didn't get taken out, but then it still gave us, price still gave us about 27 pips. So again, depending on the lot size, if it's a 0.5 lot, then you're looking at over 140 dollars in a couple of hours. So that's not too bad. Then the buy side would have had this as a setup, can you see? But then that did not quite go anywhere. Well, can you see the price never really closed below this level here? So I would have been on that trade for 15, 30 minutes, 45, 1 hour, 115, 130, 145, 2 hours, nothing happening. But then at some point, and actually threatening my stop loss. But at some point, we see price then come this way, give us about 10 points, 10 pips. And just messed about, and then give us another setup here, which would have been risk of 9 pips, and that went all the way. Maybe at this point I would have considered coming out or moving the stop loss. So this 22 pips. So that's how you've got to be thinking that way. There is no guarantee. So you've got to be seen as things are moving and changing. You're moving with it, as it were. So that's that setup there. Now I might also look at let's do something like gold. So something similar. Now when you're trading gold, you've got to realize, remember that you've got to understand what margin you require and what each paper point on gold is like. So if I take a look at the 15 minutes time frame here, so prices, there's a bullish bias here. Then what do we get? We got us a reversal pattern here, the long tail reversal pattern here, and would have put on entry there, knowing that our risk is going to be around for one standard lot. Now, your account might not allow you to do one standard lot, but for one standard lot, this is about $340 risk. But then when price came back into the wave, we had up to $460. Even if you're still here now, you're still around $160 in profit, as it were, before the market closed. So that's one example. What did we get all through the week? Yeah, can you see this here? So out of the wave happened, you got in here, but price didn't quite do anything. Got to about $300 and $400 on one standard lot, and then fell off here. So being careful, because remember, it is a bearish bias. You're just wanting to take this temporary move to the upside. So you're not looking to, most times, get to this point. Sometimes it happens. That's why you've got to then trail your stop, or just take your profit. If you hit $250, just get out, walk away, and wait for the next setup on the downside here, which you would have got here based on the normal standard wave rules. As it were, did we get another? We had the setup here. See that one there? Boom. Risk could have been $357, and the highest we ever got was $275. Now, immediately price is coming in here. I'm trying to get out because this is sell. There's a sell bias here. I'm just trying to take some of those reversals. The other beauty as well is if you find a bearish long tail happen at this anywhere at this point here, take it. Like this was close. It's not a very perfect one, but this is close. You could have taken this trade, tight stop loss $385, but look at that, $2,700, like that, just like that. Okay, so that's what I do. Just go back in history and see, where did I see this here? What would I have done? See this here, what would I have done? I would have entered here. My risk could have been $400, $403. Would I get $403 when I'm going back into the wave? Yes, I did get it. It was up to 600 even. So that's a good trade. Boom. I mean, trade done. See this one here as well. Can you see? Price is off from the wave. You get that pattern there. You put your entry, it did not happen there. You move it when you also see this long tail there. You did not get it. Then this third long tail, you put it on there. Your risk is about 190, or let's go up there, about $200. And then when it comes back into the wave, it didn't quite get there, but later it did. Got here, and you got about $220. You're out. So this is quite interesting. So see that one there. See that one there too. Can you see? So this would have been here. You had about $159, and then back into this area here, you have about 260. So nice, these two. The risk could have been at about 120. Back into the wave is about 300. And see what I was talking about, when sometimes if you're on the upside, then you can see that we had that setup there. In fact, we even had it here. Boom. This would have been a $380 risk, but then can you see that 650, and you could actually ride the entire wave to about 1,300 if you have the patience. When you're in it, you probably will not have the patience for some people, but yeah, you could have just had $1,000 instead of 300. Okay, so that's how I would do it. Just keep going back in history. How did it played up here? We had a $289 risk. Coming back into the wave is about 230. Take your profit, walk away. Just keep doing it. See that one here set up there. Back into the wave. $420. What did you get? 280 there. Price came back down, but didn't quite get to your entry, your stop loss. Maybe you could have held, or you could have closed it actually around here. But let's say you held, and then price came up. See that one there, perfect setup, nicely done. How many? $300, and back into the wave, you have about 420. So that's not bad. Yeah, this is a perfect setup on the direction of the trend. So you get a long tail there, you get a long tail there. So you first get it here, it came down but did not take you out. Still very good, just only $200 down on the standard lot. And then when it went up, boom, 770. Perfect, 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 perfect. Excellento, excellento. This is another setup here. You can see clearly their price gain was $319, but when it came back into the wave, it gave it 384. This was perfect as well. You can see there, boom, risk $250 about. Back into the wave, you're getting about 200. If you held, boom, nicely done. So if you start moving the stop loss, so what you could also do is stop loss trailing. So your initial stop loss would have been there, whether it was is a break or a touch. Initial stop loss there. Then as that candle closed, you saw this was your entry here. So immediately that candle closes, you move the stop loss towards this low here. Then that candle closes above, you move it. As long as it closes above, you move it. Then that one closes above, you move it. And then immediately you get something like this. You really want to be moving your stop loss here, because you know this is a pattern to also bring you down. So in reality there, you would have then made about potentially about $800 on that. So without making this video too long, that is just what you do, how you go about looking at history. Now you can see the setup here is telling you to go down at this point. No, this is not what you want to be trading. You don't want to touch this. This is what you want to touch, this one here. You don't want to touch this around here at this point. There are also other ways you can trade this. Look at that, perfect setup again. Boom, $322 back into the wave, $500. Look at that one, $160 back into the wave, 250. This one is quite close. I want it to be out of the wave, so I'll consider this cautiously. This is out of the wave. Boom, entry there, $250 risk and 373 there if you don't hold. But if you're trailing the stop loss, then you could have got even more. You could have got, or you could have come out, or you would have put your stop loss here, it didn't take you out. Put it there, it didn't take you out. Then put it here, it didn't take you out. Then once you just got this here, so you had about $690. So nicely done on some of these things here. This should have been an entry, but you never got filled in on that trade, so you didn't take any trade, you didn't lose anything, you didn't win anything. Some of those things happen sometimes. See setup here, so long tail, that one to long tail, that one long tail. So you could have been entry here. This is a $350, boom, $600. Entry here, $220, boom. Other 280, or you could have got out here, which is about $300. Yeah, so this is quite, yeah, that's a setup there. Risk 260, never really got to the, so this might have been a lost that one, because it never really got into the wave, so you couldn't have come up, or you take a scratch trade there. So that's how to actually, this would have been a painful one. You'd have been here, entered here, and price never took you out. It came and pierced into your stop loss, but never took you out, and you'd have then waited for this to come back in here. It never took you out, waited, come back in here. You probably might have gone out of the trade out of frustration. Yeah. Okay, so that's a nice one there. That would have been a nice one. 380 back into the wave, you had 300. Great. Okay, so that's it. Long video now. Any questions, please let me know. I didn't have a chance to look at the second road across of those, but yeah, that's just keep going back in history and seeing, because what that does for you is it strengthens your confidence. Look at it there. If I did it So if you can show yourself the options of how many times this would have been in your favor, you'll get more confident, and then go and do it the next week. Okay. All right. You take care, and let's catch up later. Cheers.